Bitcoin has been consolidating for 7 full days. In today's video, we are going to be discussing why the majority are wrong about what is happening with the price action and how you can plan and prepare to execute the next move. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the 7-day consolidation range, going over the possibly imminent move that is going to come from it. We'll be discussing the key levels you need to be watching out for so you can plan, prepare, and execute no matter what follows. Furthermore, we'll be discussing why the majority are incorrect about this move, going over macro and short-term context, and of course doing a complete technical analysis. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you're interested in. Join us on Telegram. It is the third link down below. You'll get daily updates on charts, analysis, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our trading chart and education chat, our general chat, our trade setup chat, our news, our help, and our daily video chat. If you're interested in getting access to all of that, you can contact us in the pinned comment of the free channel or click that message to find an entire video showing you exactly what VIP is and our trading track record since February 2021. Again, guys, if you want to join, go ahead and do those steps. It'd be great to have you. Let's go ahead and get into the video. So starting on the market data, how are we currently looking? 24-hour volume is sitting at a relatively high 150 billion. This is still down 13% for the last 24 hours, but overall, relatively high 24-hour volume. 24-hour liquidations, however, have a whopping near 200 million. Sitting at 198 million there, down 31% in the last 24 hours. Taking a look at that 24-hour liquidation data, we can actually see 148 million have come from longs and 49 million have come from shorts. Taking a very brief look at the price action, we can see we had that preliminary breakout above that $53,000 level. Again, this would have forced a lot of late longs to enter as people FOMO'd in on that $53,000 break. Again, guys, we did not have the positive momentum at the time to actually sustain that breakout, and hence it was indicated as a trap or a fake out. The majority did not know that. The majority jumped in on longs here and they got liquidated as the price reached that local low point. In fact, at this local low point, we flipped back long. If we go over to the VIP over here, we can see we took a long right at the low point over there. We're up a cheeky 41% already, so looking pretty strong. Overall, guys, we can see pretty large liquidations, particularly the fact that we are in a relatively tight range for the last 7 days. So moving on from there, and we'll come back and discuss it in a lot more detail, the DXY. The DXY has broken down from that major uptrending support line we have been within for the last 2 months. This uptrend has been developed since literally the end of December. So since basically the entirety of 2024, we have been in overall uptrend. We did notice a few days ago, we broke down on this RSI trend line, which signified a negative momentum shift. And we told you guys, when we see these negative momentum shifts, and that occurred within this candle, we generally see the respective trend. The respective trend, I mean the RSI lows match the lows of the price action. That is going to be the respective trend, okay? We generally see that trend line break as a result. And in this instance, we have now seen that trend line break, resulting in the initiation of a short-term downtrend and the end of the overall 2-month-long uptrend. So right now we are targeting that lower level of support, which is going to be bullish for the traditional markets. Moving over to the S&P 500, we can see that weekly candle has 1 day and 23 hours remaining. We would love to see that weekly candle remain over 5,000. Again, if we do remain over 5,000, we are looking for continuations, 5,100, 5,200, etc., etc., looking for those whole psychological numbers. A weekly close under 5,000 could result in a short-term downtrend initiation to retest the prior all-time high. Even if that does happen, this is a major area of support, and we'd very much still be expecting a continuation in the weeks to follow. Overall, looking very bullish. Moving over to the Dow Jones, very similar scenario over here. However, the respective resistance is sitting at 39,000. We have yet to break over 39,000, but if we do break 39,000, we are expecting a relatively clean move to that $40,000 psychological level. This is going to be a key level of resistance on a higher time frame chart and a possible reversal point. Alongside that, guys, if we do break down from that $37,000 level, we could see a short-term correction develop to retest that prior high. However, the most likely scenario right now is still going to be that continuation upwards. Overall, looking solid. So that is it for the updates. Let's go ahead and jump over to Bitcoin. So a quick introduction to what we're going to be discussing. We are going to be discussing what is happening primarily in this range and why this range here, this small 7-day range, is so significant in regards to the high time frame price action, and how this 7-day range, and it's only 7 days, could potentially impact the next 2, 3, 4 weeks of price action for Bitcoin. So we'll be talking about what is happening here, why it's important, and then we'll be applying that context to the higher time frame chart and ending up the video. So without further ado, we'll get into a quick word from Bitget BingX, and then we'll jump in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump into the chart. So starting on that short term, as you can see, and as I've mentioned now already, this has been a 7-day long range. We entered that range all the way back on the 14th of February on this large green candle, which actually pushed us over that $50,000 mark, which is now going to be acting as a psychological level of support. So we'll go ahead and just draw a quick support line right over here at that $50,000 level. So a 7-day long level of consolidation. As we can see, this is going to be a horizontal consolidation, meaning we have equal highs. Okay, you can see numerous rejections from these highs. I count about 4 or 5, and we have equal lows, and you can see numerous retests and bounces from these lows. So we have an area of massive resistance and an area of massive support. What does this really mean? If we zoom out and really think about what this means, it means we have people willing to sell, okay, and we have people willing to buy. Eventually, this range is going to break, meaning the resistance will break and the price will continue, indicating that the sellers have been exhausted. That will facilitate a continuation upwards, or the support will break, indicating the buyers have been exhausted, and that will result in a continuation downwards until we meet an area of which the buyers are willing to step in to reverse the trend. So to give you overall, theory of what is happening in the price action, that's generally what we're seeing over here. We're seeing the sideways consolidation, which is a neutral pattern, okay, moving into an area of resistance between an area of support. So our biggest question is, where will Bitcoin go, and how can we predict the direction it's going to break? And then furthermore, what consequence would those breaks have on the price action, so we can understand that and then capitalize on what occurs? So let's take a look at the upside move. If we are to see a upside continuation, we need to see, and the reason I say this is because we have yet to see a 4-hour break of either direction. We have not seen a 4-hour candle close on the bottom side or the top side. So we're going to use the 4-hour as an indication of if we were to 4-hour close above or below, that would be confirmation of continuation or a confirmation that the breakdown has been sustained enough on a higher time frame, which is a greater probability of a continuation within that direction. So if we do see a 4-hour candle close above this level, and this level is going to be sitting at a price point of around 52,600, we would assume this horizontal range has been broken and we would expect a continuation upwards. However, that is but one indication. Paired with that, we need to see the momentum flip positive. So if we zoom out just a little bit, we can see the visible range of price action, and we've gone over this a few times, guys, but if you think about it, the price action hasn't really done too much in the last week, so we do have to go over the same things a few times to make sure you're fully aware of what is going on, and there's really not much else to talk about. So if we look at the RSI over here, this RSI, this downtrend we can see, okay, is a reflection of the momentum within this range of price action. We can see momentum has been reducing and price action has been rising. One really good thing is though, as the momentum has been falling, specifically within this cluster of price action, the price action has been moving sideways. This is an indication of resilience to a breakdown. We can see that resilience to a breakdown as we have now had bounces from this local low range as support. So if we were to want to see, or if we were to see a break upwards, okay, we would also want to see the momentum flip positive, meaning we want to see that RSI breakout validate. A 4-hour close plus the break of the RSI would indicate the 7-day range has broken and the price action is likely to continue. Now, where would the price action go on the short term and where would it go on the macro? So let's answer the short term first. If we were to take a measured move analysis, and that is simply going to take the distance between the lows to the highs and apply that to the breakout point, we can see that would take the price to around about 54,000. That is going to be that next target according to the measured move. 54,000. Moving over to a higher time frame chart, however, we can see over here that this level at 52,600 is going to be acting as the upper level of resistance within a major high time frame resistance range, which we are currently retesting. So a subsequent break of that short-term range and positive momentum flip would as well break us through this high time frame level of resistance, resulting in a continuation upwards, that target being 54,000 the short term. On the higher time frame, we can see, however, every time or in the past when we broke through that level after we found resistance, so we found resistance, we rejected, we came back up, we retested, we broke through that level, that resulted in a move to at least 60,000 and upwards. So we are expecting a move to 60,000 if that short-term breakout can be sustained. However, like we said at the start of the video, we are in a horizontal consolidation, and horizontal consolidations are not biased to either direction. They are in fact neutral. So although now we have described and given you the tools you need to identify a confirmation of a breakout and the targets we'd expect if we were to break out and the justification of why that is likely, we also need to talk about the alternate scenario, which is the bearish scenario in case we do see a breakdown of this range and thus the price action correcting. Where could we go? What would that mean? And how could you capitalize on that move / where would we expect to see a bounce? So let's go ahead and talk about that. So this is going to be the bearish case scenario. And the easiest way to answer this scenario is to draw in the current high time frame trend. This is going to be our current high time frame trend line. This would be the point of interest from a diagonal perspective, and we can see that point of interest lines up with a very, very key level of confluence, which is going to be 48,000, okay, to 46,000 area. There's a red box, which would be our bounce target. If we were to break down from this horizontal consolidation, drawing a measured move would take us slightly above that area, okay? That would come down to retest this upside liquidity area, okay? This wick at 48,000, this would be our primary target, okay? And then we'll be looking for bounces within that range before a continuation upwards. So zooming out to the higher time frame, that area of support, that red box we drew in, is going to be the $48,000 to $46,000 area. This is a high time frame area of support, and if we do see any sort of correction develop from this range, this will be the lowest we would want the price action to go while considered healthy, meaning if we do happen to drop below 46,000, we would actually be looking relatively bearish on the higher time frame charts, as would have been broken back into this consolidation range, which could open up the range of price action to potentially 40,000, meaning we could see a move or a swing between 46 to 40,000, which would be very, very bad, and we would not want to see that happen. So the lowest we could theoretically go while remaining healthy is 46,000. If we zoom back to the smaller time frame chart, that would take us into this red box temporarily. If we had to break down on the short term, our first primary target will in fact be this level over here. So with that being said, sorry, I thought I had to sneeze. With that being said, let's take a quick look at what is happening from a technical perspective and then move over and finish up the video. So if we take a look at the 4-hour chart, guys, obviously we've gone over the structure, obviously we've gone over the momentum. Let's take a look at our moving averages and our VRPV over here. What we can see, the VRPV is starting to cluster up. This is very, very normal, as we do have horizontal consolidation. We have greater amount of orders stacking up and prior orders stacking up, executed orders stacking up within this range. So we do generally form these areas of resistance according to our volume ranges. We can see that on the top side, we have a nice plateau about 52,000, which essentially goes upwards, and like we said, that would result in a breakout. On the downside, we have these small little peaks occurring around 50,000, around 48,000, and then a massive amount between that $47,000 to $46,000 range. So if we were to see that breakdown and that loss of the 50 EMA, the loss of a local low, we are looking for those retests of these peaks. So 50,000, 48,000, and then that $48,000 to $46,000 range if we were to break down. Overall, if we had to take a look at the current trend right now, the trend is still bullish, right? We are still on an uptrend. We are still above the 50 EMA. We are still above our diagonal levels. Momentum is falling. The price action is moving sideways, which is a sign of absorption, okay? And overall, the price action is still looking bullish. If I had to give a quick assessment, I would expect the price action to move upwards based on the current data we have now. If we were to see a breakdown, obviously, then we do expect a correction. That correction is not expected to be anything but a healthy pullback within the uptrend that we are in. Altcoins may get hammered a little bit. We actually saw altcoins get hammered a fair amount actually in the last 24 hours, 48 hours, as Bitcoin dominance kind of jumped up a little bit on the smaller time frame. We go down to the hourly chart, we can see Bitcoin dominance had a little bit of a jump up over here on the smaller time frame, about 0.5%. And obviously, if Bitcoin is dropping and the entire market cap is falling, which it did, Bitcoin dropped a couple percent over here as well, 2 or 3%. And then we see on top of that, Bitcoin dominance rise, we do generally see altcoins bleed a fair amount. So we have seen altcoins bleed a fair amount over here, but if we do see Bitcoin dominance continue downwards and Bitcoin push upwards, we would likely see altcoins regain those losses relatively quickly. So most importantly, guys, watch that short-term range. I know there hasn't been too much to discuss in the last couple of days. It is more or less the same thing, but we do have to go over the same thing a few times to lock it in and really understand the depth of what is happening. And data changes. That's important. Data always changes. There's always new things to discuss. There's always new pieces of information that can sway the probabilities in either direction. As of right now, the short term is very steady, okay? We are very sure in what we are telling you, and we are very confident in saying that if we do get that 4-hour above and we do get that momentum flip, we'll likely see a continuation upwards. Until then, we are finding a decent amount of support and the range is still intact, and we would expect that range to be intact until it does break. If we see a downside break, expect a correction. If we see an upside break, expect a continuation. Watch those validations on either side to confirm whether or not that breakout is going to be a continuation or whether or not it's going to be a fake out, like we have seen numerous times in the last couple days. Okay, guys, thank you for watching. Make sure to, pay attention what's happening. Watch the high time frame charts, put everything in context, and perceive really, most importantly, the overall trend. Remember, trade that trend until it ends. Make sure if you're in doubt, you're zooming out and really think about, more importantly, what are the drivers behind what is happening? Why is the price action moving the way it is? And what would it take for the trend to break, more so than just breaking down a support line? What are the narratives that are actually driving the price action on a macro scale? And what would have to change in people's opinions and emotions to result in them wanting to sell to break down these key levels of support? And really, to go off that one more time before we end, to give you an example, right, we do have the upcoming halving event, and the halving event is a bullish event for Bitcoin. It is objectively a bullish event for Bitcoin. Historically, we have seen bull runs develop after the halving event, and sure, the price actions are up a lot right now, right? We're well ahead of where we should be, okay? But that is massively in anticipation of this perceived bullish event. The market moves based on perception, perceived systematic risk. In a future period, if the perceived systematic risk is reduced, then people act in the present to capitalize and benefit for when that risk actually reduces. So the market will likely move towards what is more likely attuned to the reduction in the future risk, okay? So when we're looking at this price action, we can say, well, what would have to change for these high time frame levels of support to be lost? The narrative would have to change, and that likely isn't. And thus, the 46 to 48K level is a key, rigid, sturdy level of support that would have to break down for us to flip bearish again on the charts. Until then, it is very unlikely, and the macro chart is very bullish. Thank you for watching. I'll catch you guys in the next one. Have a fantastic week, and I'll see you then.